Hi, welcome to the Crypto Republic. Before we dive in, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. The crypto world is about to witness something unprecedented. XRP could vanish from major exchanges almost overnight, and when it happens, most investors won't even see it coming. This isn't speculation, the stage is set. The players are in position, and the market mechanics are identical to every historic explosive crypto shock ever. Think of it like a dam about to burst. Water is piling up, the pressure is building, and when the floodgates open, there's no stopping the torrent. How high the waters rise depends on who's ready and who gets caught flat-footed. Today we're going to break down exactly what happens behind the scenes, why exchanges could run dry, and how the next few weeks could redefine the entire XRP market. To understand what's about to unfold, we need to look at liquidity flows. Right now, corporate investment in blockchain, digital infrastructure, and tokenization is skyrocketing. This isn't random. It's capital moving where it's most efficient. History has a blueprint for this. In 1999, we saw corporate tech spending going parabolic during the dot-com bubble. The market boomed until it collapsed, leaving 80% of investors burned. Today's surge in blockchain adoption mirrors that growth curve, but with one key difference. The system is not speculative technology alone. XRP is already integrated into banking rails, ISO standard payment systems, and liquidity corridors. This is a token designed for massive capital flows, not just hype. Most people think crypto moves slowly, step by step, but supply shocks are different. They happen when demand collides with limited liquidity and the price just doesn't rise, it explodes. Back in November, XRP experienced an extreme supply shock. 51 billion in 24-hour trading volume sent it from 47 cents to $3.45. That wasn't pure hype, too much money chasing too few tokens, and the price had no choice but to soar. Right now, XRP trades around $2.78 with a market cap of 166 billion. Mid-supply shock of 10 to 15 billion could push it 10 to 20%. A significant shock of 15 to 25 billion could push it 20 to 50%. But an extreme shock, 25 to 50 billion in a single day, could rewrite the charts entirely. The conditions that created November's shock are aligning again, but this time the firepower is even greater. Liquidity from rate cuts, fresh capital is entering markets faster than ever. Record tech investment in blockchain, fueling deeper integration with traditional finance. Institutional adoption at scale, ETFs, tokenized treasuries, and massive capital inflows from firms like BlackRock and Vanguard. The result? Exchanges could literally run out of XRP, forcing the price higher automatically. And unlike last time, this isn't just retail FOMO. This is systematic infrastructure level adoption. Here's the overlooked secret most investors miss. The circulating supply of XRP on exchanges is just a fraction of total supply. Large portions are locked in escrow or held by long-term investors. That means even moderate surges in demand can trigger extreme price spikes. It's like a sold-out concert when a few hundred extra fans show up and there are no more tickets. The price for access skyrockets. That's exactly what happens with XRP when daily volume surges against limited liquidity. Crypto isn't random. It follows cycles. Historically, data shows that late Q4 through early Q1 is a recurring window for liquidity peaks. November 2017 to 2021, the same patterns repeated. And now we're entering that window again. With that same rate cycle, inflows, and even larger institutional presence, XRP doesn't need miracles. It only needs conditions proven to drive exponential price action. Strained supply, massive liquidity, and systematic adoption. The fuse is already lit. We're waiting for the spark. Human behavior is predictable in these situations. First, we got disbelief. Price grinds sideways, investors ignore it. Then we got shock. First wave of volume triggers sudden doubling or even tripling of price. Early believers feel validated. FOMO next. Media frenzy hits. Institutions pile in. Retail panic buying begins. The biggest gains are captured before most retail participants even realize what's happening. Preparation beats reaction every time. This cycle is different because of institutional participation. ETFs, tokenized assets, and bank adoption create a multiplier effect. Retail alone could drive price multiples higher, but institutions can pour tens of billions in one wave. Think of it like pushing a small car versus an 18-wheeler. Both create movement, but the 18-wheeler crushes everything in its path. That's what institutional inflows can do for XRP in a thin exchange environment. Here's the truth. When the XRP supply shock hits, it won't be gradual. It'll be fast, violent, and completely blindsiding for anyone who waits too long. By understanding these mechanics today, you're already one step ahead of the crowd. Remember, history doesn't wait, and neither do the markets. Time to position yourself is now before the floodgates open. What's your plan for the XRP exodus? The smart investors don't just watch history, they act before it happens. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic, bringing you the truth about XRP, global banking moves, and the wealth transfer already unfolding. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.